Well, hello, premium hunters, and welcome to another episode of my weekly portfolio performance update. And boy, do I have an interesting one for you today. This is going to be a bit different than all of my previous weekly portfolio performance updates. But this one is for week 20, which was May 12th through May 16th. So last week was week 20. And if this is your first time to my channel, my name is Andrew and I'm an options trader, and this channel is where I pull back the curtain to show you exactly what I do and exactly how I do it. I post these update videos each week, typically on Mondays, to analyze my previous week's options trading. And I also post videos with general knowledge type of information about options trading, as well as step-by-step guides on how to execute the trades. So if you are interested in following me on my journey, be sure to like, subscribe, and hit that bell notification. So I have an interesting episode that will be a little bit different than all of my previous episodes, but one thing I want to do is I want to make a few special announcements. First, I'm making some changes to my strategies in today's video, and I'll let you know what those are and why I'm doing it. Second, I have a big lesson learned that I would like to share with you. And then finally, if you stick around to the end, I have a very cool hack that I will share with you that can help boost your overall profits, or at the very least, help cover the cost of commissions and fees. So just a quick disclaimer before we move forward, I do want to make sure you're aware that I'm not a licensed financial advisor, and that any information that is shared on this channel is for educational purposes only and should not be considered financial advice. All right, so let's go ahead and jump into this one, because I think this is going to be a little bit longer video with the information, the extra information I want to cover with you. So I want to cut straight to the chase here. So typically what I do in these videos is I go over all my closed trades. I talk about the strategy, the goal for the strategy, the profit and loss of each one of my trades, and do an overall performance analysis of those trades. Then I look at my performance for the overall week, compare that to previous weeks, see how we've done so far this year. And then I give you any insights based on that analysis. All right, so let's go ahead and get into the announcement that I wanted to make about the changes that I'm making to my portfolio. And I'm really excited about this because I see this as these are emerging trends in the options trading industry, especially in the retail sector. These are things that institutions, the larger institutions, really can't do because there's just too many limitations. They have to deploy too much capital in order to be able to implement these strategies. But there is a community that's growing larger and larger of people that are doing these types of strategies. And what I'm referring to is what you can see on the screen here is backtesting and trading bots. So the whole idea here is that you use a backtester to find a strategy that has edge. That's something that you can use over and over and over again, that if you use it for the long term has shown that it will be successful over the long term. Now, of course, bots are testing historical data, and historical performance is no indication of future results. I think we all know that. But at the same time, I think we know that if we see a certain trend or a certain pattern that keeps happening over and over and over again, that obviously that pattern probably has a fairly high likelihood that it's going to continue. Now, we do tend to go through phases in the market. You know, we go through phases of higher volatility, lower volatility. We go through phases where certain sectors are favored and other sectors are not favored as much. And that tends to shift around, and the overall markets are constantly evolving. But there are things that we can do to implement these kinds of strategies to give us a positive result over the long run. So these are the backtesting and the trading bots. These are tools. They're not really strategies. These are tools that you can use to implement strategies. And I've been aware of these for a while now, but I've been so busy that I haven't really had the time to take a step back and search for information and research information about this. And so that's what I've been doing the last few weeks. And I will tell you, it's a whole new world. There is a lot of information and there is a lot to learn. It's almost like switching from stock trading to options trading. There's similarities and there's overlaps, and there's things about stock trading that will transfer over to help you with options trading. But you also have to learn a lot more in addition to options trading, and it's the same thing with these tools. There is so much to know about these tools and how they work, and certain things about options trading that if you've been options trading, certain factors or elements that you've not really paid very close attention to that you now have to pay much closer attention to. Just an example is stop losses. I've never used stop losses with my options trading, but with a lot of these trading strategies that you use with the trading bots, stop losses are essential. So your understanding of stop losses and how they work and how to implement them and the different types of stop losses and when you should use one type and not use another type and vice versa becomes much more important. So all of these things are things that you have to learn in addition to your standard options trading. The way I see it, like I said, this is an area that is growing pretty rapidly and it's growing more and more. And we live in a world that is constantly changing, constantly evolving. And if we don't keep up with those changes, then we're going to get left behind. Now, don't get me wrong. I'm not trying to say that the old strategies don't work anymore, because they still do. They certainly still do. But what these tools do is they allow you to trade much more efficiently and much more effectively. I don't think the strategies that we've always had with options trading, the iron condors, the jade lizards, the credit spreads, the strangles, they're not going away. They're actually being used with these tools. They are actually continuing to be used with these tools, and you can continue to use them manually. But what these tools do is allow you to detect trends and then implement those trends into trading bots to automate the whole process. Now, don't get me wrong, just because the process is automated doesn't mean you can just not pay any attention. You still have to pay attention, still have to review the trades, you still have to compare your bot to your backtesting, and there's still analysis that has to be done on an ongoing basis. But rather than executing these trades manually, they're being done automatically, and then all you have to do is review the results to make sure you're getting the results that you were expecting. I kind of liken it to accounting, which was my major in college. When I went to school, we did have, now this was a while ago, I don't want to show my age here, but yeah, this was a few decades ago. We did have computers at the time, and we did have computerized accounting. We had a program called Peachtree that was very common. I don't think it's around so much anymore. I think it's kind of been replaced by QuickBooks. But back before computers, there was a manual process to doing accounting. You had journals that you had to handwrite numbers into, and you had to add up the totals of the columns, and you had to move a total figure from one journal to another journal, and you had to close out a certain journal. And so it was a very labor-intensive process that has been made much more efficient through the use of computers. So we don't really need to do that manual process anymore, but we do need to know about it, and we do need to understand it. And when I went through school for accounting, even though we had computerized accounting, and it's not something, the manual process is not something we do anymore, it is something that we still need to understand, because we need to understand what is happening to the numbers when they change. How are we getting to the bottom line P&L? How are we getting to the numbers that we have in the balance sheet? What does equity mean? What do all these numbers mean, and how do they affect each other? And the best way to totally understand that is to understand the manual process of accounting. And it's the same thing for the trading. Even though we have bots that can automatically execute these trades, we still need to understand how these trades operate. We still need to understand why we're getting the results that we're getting. So even though we can automate the process, and this is becoming more and more popular, that is not going to get rid of the necessity to understand what's going on behind the scenes. But like it or not, we are moving in the direction of automated trading. It's the way of the future, and I recognize that. And that is the primary reason why I am shifting my strategies in my portfolio, and I'm spending a lot of time studying to understand the tools and how to use the tools so that I can implement these tools smartly in my trading process. And so that's going to become a part of my weekly portfolio performance update. So if you want to watch, come along with me on my journey to see how this progresses, then make sure you like and subscribe. All right, so now I have switched over to my trade tracking platform. This is where I'm going to get into analyzing and going over my trades for week 20. And this is where I also mentioned that if you are new to options trading, if you're not familiar with some of the basic concepts of as far as like what options are and how they work and the different dynamics behind options, I invite you to check out my video called Demystifying Options, and that is linked in the description below. That will give you some basic fundamentals with regards to options and options trading so that you can better understand some of the information that I'll be going through in this video. Additionally, I also like to point out that it is a very good idea to make sure you're tracking your trades if you do get into options trading, or if you're just getting started in options trading. Have a mechanism for tracking your trades so that you can analyze your results. That was one of the mistakes that I made when I first started options trading, is I wasn't really tracking my trades, wasn't tracking my results. And that's where this application here called Trader Sync comes in very handy. It's an application that I recently found that I really enjoy using because it links to my Tasty Trade brokerage account, and it allows me to pull in all of my trades, assign tags to them so that I can categorize all my trades, because sometimes they can get pretty complex, and they can, one trade can depend on another trade, and it can be difficult to know how you're performing overall if you're not tracking and if you don't have a system for tracking your results. So I highly recommend Trader Sync. It's a platform that I've been using for the last couple of months here, and I really enjoy it. And if it's something that you want to check out, I do have a referral link. They will give you a free trial where you can try out the software, try it for yourself, see if you like it, and if you do, you can subscribe. If not, then you can use your own solution. There are many solutions out there. This is just one that I found that really works for me, at least for right now. So let's go ahead and recap our performance up until this week. So this is my performance through week 19, not including week 20. So the overall profit that I had up and through week 19 through my options trading was $61,032. And we can take a look at the chart here to see how that looked on the chart. We can see a pretty good graph, pretty good shape to that graph. We want to see, obviously we'd like to see straight up, but I mean, to see a healthy return, we want to see something around a 45-degree angle, which we see for the most part here. We did have a drop-off around Liberation Day when the markets went crazy, and Trump announced his tariffs, and I did see some losses there. And I do have another chart that I like to look at, which is the week closed. Yeah, here it is, the week closed. So what this does, each week when I close out trades, I have a tag that is the week closed. So I can easily see what my performance is from week to week. Every time I close out a trade, I will assign the tag for the current week to that trade. So I have it identified by a four-digit number, which is the first two digits are the year, and the second two digits are the week of the year. And so through week 19, you can see what my results are for each one of those weeks. And week 5 was my best performance, where I had over $13,000 in income from options trading. And then week 15 was my worst week. That's where I had $18,000, almost $19,000 in losses. And the week prior to that was also a pretty big down week with almost $4,900 in losses. And that was right after Liberation Day, and the market started going crazy, and I started getting, as it turns out, I was using too much of my buying power and too much margin, and that created some margin calls for me. So that is a mistake that I made. And I mentioned earlier that I had a major lesson learned, and that is the major lesson learned, which I'm going to get into a little bit later here as I go through my results for last week. All right, so let's go ahead and get into week 20 and take a look at the results that I had there. The first thing I want to go over is an iron condor that I closed out. This is a trade that I did in Merck, an iron condor, which is basically two vertical spreads on each side. You have a call vertical spread and a put vertical spread, and the idea is that the price of the underlying stock stay within the short strikes of the vertical spreads. And if that happens, and if you're within those strikes at the time of expiration, or if you hit your profit target prior to expiration, then you make your profit. So this one did end up closing out as a winner. It's a small winner, but I kept it small for a reason, because it was experimental. Let me show you where I found this trade idea. So here is where I found this idea. It is a platform called Options Alpha, and I found it and started looking into it and found some pretty interesting features with this platform. So I've been kind of playing around with it and just testing it out a bit. I did sign up for a free trial, so I am in a free trial period, and it's something that you can do as well. I do not have an affiliate link because I'm still kind of on the fence. I'm testing it out. It seems to have some pretty promising features that I think could be beneficial to the average trader, but that's just my initial impression, and I haven't had enough time to really put a lot of time and effort into it. But here's how I found this trade, and this is one of the features that I think is very interesting. Let me go ahead and jump into it. It's right here called Trade Ideas. So if I click on that, what it does is it brings up a list of trade ideas. And what this platform is doing, at least what they claim it's doing, and it seems to be doing that as far as I can tell, what they claim, is that once the market opens, which right now it is closed, I am recording this video just prior to the market opening, but when the market does open, it starts analyzing all of these symbols right here and all of the different combinations of trades that you can put on with options for all of these symbols. And then what it does is it comes up with certain metrics with regards to all of these trades, because it's already analyzed, it's already done all of the math in the background. And when you log into this platform at 9:30 in the morning Eastern time when the market opens, this is going to be a much lower number. And as the day progresses from 9:30 to 10 to 10:30, you'll see this number increase more and more, and it will have more and more results down here. So what you can do, rather than manually analyzing and sorting through columns of information, such as volatility, and then you have to go into the trade, you have to look at what your probability of profit is, you have to look at what your risk to reward ratio is. You have to look at all these figures to try to determine to trade A is good, but is trade A better than trade B? Which one is better? This platform does all of that for you. So it makes it really easy. So for example, if I wanted to find trades that had a probability of profit above 70%, I can just come into this little filter here, click on 70% or higher, and then it filters out all of these trades that are in this list are 70% or higher for the probability of profit. And then there are some other key figures here. They have a couple that are proprietary to the platform. EV is not proprietary. EV is expected value, and that is the anticipated. They've got a little tool tip button here that you can roll over, and it gives you the definition of what it is. But that is the anticipated dollar value per contract when traded over time based on probabilities. So obviously the higher the EV, the higher the expected value, then the higher quality trade this is. Now this next one here, alpha, is a proprietary metric that this platform, Options Alpha, has come up with. And what that is, you can see it right there on the screen, it's the anticipated return of risk when traded over time. So they calculate that by taking the expected value and they divide that by the max loss to get the alpha figure that you see here. So what you can do is determine which one of these criteria are more important to you, and you can sort each one of these columns just by clicking on it. So if I wanted to find the trades that had the highest alpha, I can just click on that to sort from ascending order, and I can see here that this target Iron Condor, which has a 7 days until expiration, which also has a risk reward of 85.2, and that risk reward is determined by taking your max profit and comparing it to what your max loss is. And then you have your probability of profit, you have your probability of max profit, and then you also have your probability of max loss here. And so you have all of these figures. It also tells you when earnings is. And the other really kind of cool feature about it is it tells you how many other traders that subscribe to this platform are in this trade. So if I want to find the trade that has the most amount of traders in it, I can just click on that header, and I can see that this TLT Iron Condor has more traders in it than any other of these trades on this platform that had come up, at least in this particular iteration. This is constantly changing, constantly evolving, so obviously this number here is going to constantly change as well. You know, today when the market opens up, there's going to be a trade that probably has better criteria or metrics than this one, and you'll probably see the number of traders increase in that particular trade. But you know, as time goes on, this trade may deteriorate, and some of these numbers may deteriorate, and you may see traders jumping out of it. So, but anyway, I thought this was really cool. Let me go on and show you. So the next thing that I can do here is I can actually click on this, and it shows me the profit and loss graph here. So you can actually see you got the price graph down here, or the price axis down here. And then you have your P&L axis up here. So as the price in the underlying goes up and down, you can see how that affects your profit and loss. Obviously, to get max profit, you want to be between the 53 strike and, I'm sorry, that's $53 in profit. It's the 94, you can see at the bottom. You want to be between 94.89, and you want to be below 94.89 and above 84.02. And if you are, you're going to get $53 worth of profit for each contract that you have on for this trade. Shows you what your long put is, your short put, your long call, or your short call and your long call. And then you can also adjust these, and then you can see how that affects your graph. But let's say, for example, you love the trade and you want to go ahead and put it on. you can link your brokerage platform, and this is compatible right now. I know it's compatible with Tasty Trade because that's the brokerage I use. I have it linked to Tasty Trade. I believe that TradeStation, I'd have to double check on that, but also TradeStation and Tradier is also compatible with this platform. And the nice thing about those two platforms is if you link through their platform, then the subscription, as I understand it, don't quote me on this, but from what I've read, if I understand it correctly, if you link and trade with those brokerages through this platform, the subscription of this platform is covered and your commissions are covered for those brokerages. I don't know how they make money by doing that, but that's why I'm wondering if that can actually be true or not. It kind of sounds a little bit too good to be true, but I am exploring other brokerages because I do want to diversify my holdings, and so I'm looking at Tradier and TradeStation and also Charles Schwab with the Thinkorswim trading platform. So I am going to be moving some money and putting some money into another brokerage account. So if I end up liking what I see in this platform, and if I end up deciding that I want to continue using this platform, then I probably will link it with Tradier is the way I'm leaning, and maybe TradeStation in order to try to take advantage of that offer that they're offering. And so if that turns out to be true, or however that turns out, I will report on that later at a later date. But I wanted to show you right here that if you like the trade and you want to execute the trade, you can do it right through this platform. So all you have to do is select your bot here, and I have a couple of bots set up. I have one set up for my IRA account with Tasty Trade, and I have another one set up with my margin account with Tasty Trade. So all I have to do is select the one that I want to use. They offer a number of different exit options, so that when you're ready to exit the trade, if you have certain criteria that you want to use when exiting the trade, you can select it here, and it will automatically close the trade based on your criteria. One really cool one here, which is one that I'm toying with, is a trailing stop. So basically, I usually use 50% as my profit target. So I can put in 50% of my profit target, but then I can also put in a 10% pullback. And so what that does is if I hit my 50% profit target, it won't close the trade. It'll keep it open. So it could go to 50, it could go to 55, it could go to 60, it could go to 65, 70, and maybe it goes to 100%. And if that happens, then I get to keep more of my trade. But if it pulls back by 10% after reaching that target, it'll close out the trade. So it gives me an opportunity to make more, but it's not going to extend the trade if it starts moving in the opposite direction. So I think that can be an effective way of closing out trades with this type of profit target. So again, all you have to do is select that. So let's just hit, let's do the 50, and I'll do 50 and 10. Okay. And I can apply that and then save that and then place trade. And then what it will do is the market's closed right now, but it would open up another window, and it'll show you that it's trying to fill the order. And once it fills, it'll give you an indication that it has filled. This selection here lets you go back and look at your portfolios. Basically, like a bot is kind of like a holding area or a portfolio. So I have one for my IRA and one for my margin bot or my margin account with Tasty Trade. And this shows me all of the trades that I've opened and closed and tracks the performance for those. So I can click into it and see that here I've got all of the information. Right now my total P&L is $107 loss. I'm just doing small trades to test this out. my return is negative 10%. I do have, as far as my current positions, this is what I currently have on. And so I have this target iron condor that I've been in for three days, and I've got a negative $120 profit or $120 loss on that one. And then this X is United States Steel, and I'm also showing a loss right now, $40 on that one as well. But let's see here. I've already closed out a few trades in here, and so far they've all been profitable. So so far so good. It makes sense to me. I think it is. I think it is something that can work. There's a lot more features. They do have a backtester. They do have this 0DT Oracle where you can go in and find 0DTE trade ideas. And there's just a lot more features. They have a community here where you can communicate with other users of this platform. So again, this is something that I'm just testing. I'm experimenting with it. I'm learning about the features. I'm trying to decide if this is something that I want to use on an ongoing basis. So anyway, getting back to my TraderSync tracking platform, this Iron Condor was one of those trades that I found through Options Alpha, through their trade finder, and it did work out as a profit. I kept it small just because, you know, I'm experimenting, but it did work out, and we'll see how performance tracks over time. All right, so let's go to the next strategy here, which is a covered call. And as you can see right here, I made an $8,423 profit in this covered call in Palantir. And so this profit in and of itself looks very nice, but overall, I took a big loss. So let me explain. So to explain this, we have to take a little bit of a trip back in time, and what I'm going to do is add another setup here, which is the cash secured put. And I'm going to look at Palantir only. So let's go ahead and put that in there. And then we can turn this off so that we can see all of my cash secured puts that I did in Palantir. And so as we can see here, back in February, I was selling cash secured puts in Palantir. And the reason why I was doing this is because I had identified Palantir as a stock that I wanted to own. So rather than buying the stock outright at the current stock price, what I decided to do was sell puts. That would allow me to collect premium on those puts, and if Palantir went up in price, the options would stay out of the money, they would expire worthless, and then I would get to keep my premium. If the stock dropped in price, then my options would go in the money, and then I would have to buy the stock at the strike price. So as you can see here, I sold a 110 strike price, I sold a 117 strike price, and then I sold a 123 strike price. And because my exit price is 0, that indicates that this expired worthless, which means I did not have to buy the call back. I collected all of the premium for this particular option, which was a total of $4,900. I kept all of that money, but then I had to buy the stock at $123 per share when the stock was below that. So after I owned the stock, then I decided to take advantage of the fact that I could continue making money off of the premium by selling calls, out of the money calls. And so if I add my setup here for covered calls, right here, it'll show me all of the covered calls that I sold for Palantir and how much money I made on that. So if you look at all of the puts that I sold and all of the calls that I sold and all of the money that I generated or premium that I generated from selling those, it was a total of $20,000 and almost $58. I did take some losses in here, and that was the time period around Trump's Liberation Day when the markets just tanked. the market's tanked, the volatility explodes, the prices of the options explode, and what you're trying to sell at a higher price and then buy back at a lower price has now exploded in value. So that obviously affects your buying power significantly. And so that put me into a position where I had to close out some of these calls at a loss in order to free up buying power, because I was getting a margin call. Margin calls when the brokerage says, hey, we need more money from you because we're lending you money to keep these trades on, and now your trades are showing a loss position and we're not comfortable with that, so fork over some money. And if you don't do it, they will automatically execute some trades on your behalf, and it may not be the ones that you want them to execute. So I did the ones that I wanted to execute in order to free up that margin. And so overall, if you look at all of these cash secured puts and covered calls, I generated just over $20,000 in premium from those. Well, now that all sounds great, doesn't it? I made 20 grand off of selling these options. Well, not so fast. That's where I come into my big lesson learned that I'm going to be sharing with you in this video, so that you can learn from my mistake and not make this same mistake in your own account. So here's the problem. You got to remember that there is a stock component to this trade. And on February 21st, where were we with the cash secured puts? Yep, right here on February 21st, when this option expired worthless and I was assigned the stock, I had to pay $123 for the stock. But around the same time, I was also assigned shares of Google and Amazon, both from doing the same strategy here, selling cash secured puts. And in short, I miscalculated and used way too much buying power. And so when I purchased all of those shares, which I had to do as part of the strategy because I was assigned, I could have rolled, but I wasn't worried about it at that time again, because I had miscalculated my purchasing power. So I purchased those shares on margin. And when you purchase anything through a brokerage on margin, it's like basically buying something with a credit card. You're going to be paying high rates of interest to hold whatever it is that you bought. And so within the past couple of months, after I noticed that, oh my gosh, these were purchased on margin, and not only that, I wasn't really so worried about the fact that they were purchased on margin. What I didn't realize was the interest rate that I would be charged on the margin. And so when I saw the amount of interest that I was paying on my statements and realized, holy cow, this is like a credit card, that's when I realized this is not good and I'm going to have to do something to fix this. So, the one thing to realize is that I have never actually purchased stock or any other kind of financial instrument on margin before. And so I didn't realize the amount of interest. I guess I just didn't really pay close enough attention to that. And so when I did see that and I did realize it, I realized that this is a problem. This is a problem because now any profits that I'm making or any return that I have on my investments, you now have to subtract out the amount of interest that I'm paying, and it obviously dilutes my performance significantly. And anybody that wants to maximize their returns obviously does not want to dilute their returns unnecessarily. So what ended up happening is that the most recent call that I sold in Palantir, at the time that it expired, was deep in the money. And I had the decision of rolling that call out in time in order to extend that particular trade, or letting it expire worthless, keeping all of the premium from that call, or letting it expire worthless, keeping all of the premium from that call, and then selling the stock at the strike price for that call. And we can see that was this transaction, or this position right here, where I had a strike price of 105. And so I decided to let that expire, let my stock get called away at 105, and I got to keep the $8,436. And unfortunately, I had to sell the stock that I bought here at 123 at 105. So my overall profit and loss from this series of transactions that I did in Palantir, in order to determine that, I would have to take the amount that I paid for the stock minus the amount that I sold it for. So that would obviously show up as a loss. And then I could add back all of the premium that I received for all of these options trades that I did. And this platform would make it very easy for me to see what that is. And all I have to do is add back in the stock transaction in this list here so that I can see what my overall P&L is. And I'll do that now. So in order to do that, I recorded that as a long-term stock. So I can just come down here to long-term stock, select that, it'll add it back in, and boom, there we have it. So there is the stock. I purchased it for $123 per share. I sold it for $105 a share. That was an overall loss of $34,200. Ouch, that's a big hit. I get to add back in all of the credit that I received for all of these options that I traded. And overall, it was a hit of $14,152.14. Obviously, that's disappointing. It's not something that I ever want to see on my portfolio. But again, this is why we track our transactions. If you're not tracking your transactions, it's very easy to lose track of this. And when you see these profits coming in from all of these options that you're trading, you may lose sight of the fact that you're putting yourself in a position where you could possibly lose money on that stock if you're in this kind of situation. So it's very important to understand the overall impact of these trades that you're doing and to track it over time to make sure that you're not giving up money to make money, and are you giving up more money to make less money, which is essentially what I did here. The mistake that I made several months ago by putting on these trades, trying to collect too much premium, getting a little too greedy, and not realizing that I'm using too much capital requirement in my brokerage by doing that, which when Trump did what he did and the market tanked, caused volatility to explode. That created margin calls, and it put me in a position where I had to buy stock on margin. I'm paying interest, a high rate of interest on that stock, which is not something I want to continue doing. So I let it go. I took the loss, I took the hit, and it is what it is. Lesson learned, move forward, register that into my lesson learned vault, and make sure we don't repeat that mistake. So I also want to point out that in addition to trying to cut the cost of interest that I was paying on the stock that I was holding for Palantir, there was a couple of other reasons why I decided to just let this get called away and take the loss. And one is an opportunity cost. When I have my buying power tied up with stock that I own, and I have calls that are deep in the money that I can't generate much income from, then there is an opportunity cost to that. I'm not able to use that capital to put on other trades or other positions where I can generate income. And so I decided to just go ahead and take the hit so that I can take advantage of the other opportunities. And the ability to take advantage of those opportunities is what's going to allow me to earn this money back. So that's one reason. And the other reason is because of something, the hack that I mentioned earlier in the video that I'm going to get into in just a little bit. So stay tuned for that. All right, so now let's go ahead and get an update on my zero DTE trading. That is a new strategy that I am learning about, and I've been doing some trades, again, small amounts, because I am learning, and I expect to lose money while I'm learning, but I want to minimize those losses. So as you can see here, I continue to do some of the iron condors. If you want to learn more about the multiple entry iron condors, you can go back and watch the previous couple of videos that I did where I discussed, I think it was in week 18 was where I described how that strategy works. And then I did some more in week 20, or I'm sorry, week 19. And then here you can see in week 20, I did some more. I did a total of 24 trades. I did those trades on, we can see down here, on Tuesday, Wednesday, Thursday, and Friday. When I do the multiple entry, what I'm doing is 6 iron condors spaced throughout the day. The idea is for the iron condors to expire worthless on both legs, on both sides, the call side and the put side. If that happens on each iron condor, then I will obviously maximize my profits. Typically what happens is you're going to get called out. I put a stop loss on one side, actually on both sides, and that stop loss is just under 200% of the credit received. So essentially if I receive $3 credit for the iron condor, I'm sorry, let me back up. If I collect $2 for the call side of the iron condor, then the stop loss is going to be just under $2, $1.90, let's say. And so if I get stopped out on the call side, that is going to put me essentially in a break-even position, maybe a slight profit depending what I paid or what I collected on the put side, assuming the put side doesn't get stopped out as well. That can happen where you get both sides stopped out. Typically it's going to be one or the other, and sometimes it's neither. And so if you can just have more legs that don't get stopped out than the ones that do get stopped out, you're going to make a profit for the day. It is possible where you can have one side stopped out on all 6 trades and still make a small profit. And that's why we set the stop loss where we do on each side. So anyway, here are my results for last week. Again, I did 24 total trades. I did not trade on Monday. I traded on Tuesday where I made $64. I lost $407 on Wednesday, $198 on Thursday, and then $102 on Friday. Again, I'm still learning, I'm still tweaking, but the other thing too is even if I was executing this perfectly, with this type of strategy, there is only a small edge to this type of strategy. So yes, you can make money over time, but it is not a huge edge. So you have to anticipate some drawdown periods where you're going to have maybe a week or 2 or maybe even a month of losses before you start generating profits again. And that's where backtesting comes into play. And I want to just kind of show that to you to kind of give you an idea of what I'm looking at and what I've been experimenting with and what I'm going to continue experimenting with in order to implement some new strategies into my, my portfolio. All right, so I just launched a platform. This is a backtester called Options Omega. And I've been spending a lot of time learning how this platform works. There's a lot to it. There are a lot of different parameters that can be entered into this platform, and so it's very important to understand what those parameters mean and how to implement that and how to get value out of this platform. But essentially what it lets you do is it lets you enter all of the parameters. What I can do here is come up to New Backtest, and here's where I can enter all of the parameters for a trade strategy that I want to employ. And I've got a sample here, which is a iron condor with re-entry. And what this trade does is that, let me just show you here real quick. at 9:32 a.m. in the morning, if the VIX has an overnight move down of 25% or less, then it will execute this trade. And the trade is an iron condor where we sell a put for $5 and we buy a put for a nickel. We sell a call for $4 and buy a call for a nickel. And then we have a stop loss of $60.50. And we have a profit target of $3.50, but this profit target will adjust the stop. If we hit a profit of $3.50, then the stop is then adjusted to $2. So right here, we're basically locking in a profit. So if it regresses and our profit then reduces back down to $2, we keep the $2 and we just get out of the trade. But if the profit continues to run, then we may be able to close out. It might expire for 100% profit. So this is just kind of a way to maybe squeeze a little extra juice out of the trade. Down here we can input our fees and commissions. It currently has $1.25, which is not accurate to Tasty Trade, but it's not too far off. We can enter slippage here. Slippage, if you're not familiar with that term, is the amount, let's say for example, if you have a profit target or you have a stop loss of 650 and you hit that amount. So the trade hits 650, you want to go ahead and close out the trade and take that loss. Well, the platform, your brokerage, might not be able to execute that trade at exactly 650. It might end up being 655 or 670, maybe 675, just depending on how fast the market is moving. And so whatever the amount is beyond whatever your target is what we refer to as slippage. That's an extra cost that this platform allows you to take into account to be a little bit more conservative with your estimates. Because again, remember, this is looking back in time. This is not a crystal ball. This is not predicting the future, but it's trying to give us a good idea if we continued to implement this trade into the future. It's trying to give us a good idea of what we can expect with the future results. We have a couple of other conditions. Again, there's a lot of parameters here. I'm not going to get into all of the weeds. If you want to learn more about Options Omega, they do have a section. You can just hop onto their website and they have some training videos that teaches you all about all of this. That's what I've been spending a lot of time doing. But one more thing here that I do want to cover with you is that I will re-enter the trade after this trade exits. So after 2 minutes, if I close out this trade, whether it's for a profit, if I hit my profit target, or if I close out for the loss, it will re-enter the trade after a 2-minute cool-off period. And then if it's 3 o'clock or later, it will not enter any more trades. So this is another version of a multiple entry iron condor, but it is not going, it's only going to have one trade open at a time. Whereas the other version of the multiple entry iron condor has multiple positions on at the same time. This is just one at a time. So this is more similar to the RTS strategy that I covered. I think that was in we're in week 20 now. So I think that was in week 18 where I covered the RTS. So essentially it's mitigating risk a little bit more by only having one trade on at a time. So let's go ahead and take a look at the results of this trade here. We can see from January 1st of 2020 to March 10th of 2025, if we started out with starting capital of $100,000 over that time period, we would now have $192,730, a P&L of $92,730, and it shows some other metrics here like your max drawdown, your CAGR, MAR ratio. And again, you can look at some training videos to explain what all of these metrics mean, but these are all very important metrics to understand to when you're building a portfolio and you want to execute one of these strategies, to know how that affects your overall portfolio. Because at the end of the day, you can see here that even though this graph over time is moving up, there are periods where it moves down and you are taking a loss. Right here we can see we took some losses over maybe a month or two. Right here, another month or two where we were taking losses. But if these losses would have scared us and caused us to stop doing this trade, maybe like, oh my gosh, I don't think I can stomach any more losses, this trade strategy doesn't work. And if we stopped executing it, look at all of the profits that we would have lost out on. So these backtesting platforms allows you to have the confidence that the trade strategy works even through these drawdown periods. And that's where this metric right here can be very important, because you can have a trade strategy which shows great results, like it's just killer and you would die to have these kind of results, but you also have a very large max drawdown. So you have to ask yourself the question, do you have the stomach to persevere through that max drawdown? If you have a huge max drawdown, even though the overall results of that trade strategy may be great over the long term, if you can't hack it through that drawdown, then that's not a good strategy for you. You're not going to be able to stick with it for the long term, so there's no point in even trying to implement it. Then one more thing I wanted to show you here is the trade log. You can click on this trade log and you can see the details about each and every one of the trades that it simulated over the time period that it did. Really cool stuff. I can click on the show trade strategy here and it shows the performance of, let's see, you've got the trade here, so the P&L of the trade. You have the performance of the underlying, how that moved, and then also the VIX, the pink line. If you want to call it pink, whatever color this is, that's how the VIX moved throughout the day or throughout this trade. And so you can see how each one impacts the other. You can see the overall dynamics of the trade. So now I want to show you how you can use the results that you get from your backtest to program a bot, an Autobot trader, in order to execute that strategy for you. And that's what we have here. This is the other side of this strategy. This is the other tool that I've been spending a lot of time studying and learning. And so this is called Trade Steward, and each one of these is a bot that I have set up and programmed. And I can go ahead and click into this edit button here, and this shows all of the parameters for this bot that it will execute throughout the day if this bot is enabled. It happens automatically and it's really cool to watch. It gives you a ton of information even throughout the day as the trade is executing to show you how the trade is performing. Let me go back to all of the trade bots here. Because then what you can do, and it also over time tracks the performance of each one of these bots. And these are the bots that I have set up for the MEIC. I've got one to execute at 12:30, another one to execute at 1 o'clock, 1:30, 2:30, and there's another one at 2:45. I've got some other bots here that I've been tweaking it, I've been working with it, and I've been experimenting with it. And then also here, if I click on this button here, it shows me historically how this particular bot, so this is the 2 o'clock Iron Condor that gets executed, and this is the one that has actually given me some profits, whereas others have not. But you can see here just so much data that it tracks. you can actually see down here, this is some of the trades that have executed, and it shows you all of the details about that trade. So for example, this trade was executed at 157 on May 13th, and I collected a credit of $2.80. So we've got a put side here and we got the call side here, and as you can see, both sides expired. So I was able to keep all of my profits, or all of the premium that I collected for that particular iron condor. Then the next one we have, this one was on May 14th. It executed at 157. This particular one we sold at $2.75. The put side expired, so I got to keep the premium from the put side, but the call side got called out, or stopped out, I should say. And you can see here that I was credited $275, but then when I got stopped out, I was debited $405, and that gave me a loss of $130 on that particular iron condor. On the 15th, you can see, collected $320, was stopped out on the put side, a debit of $270, that gave me a profit of $50. So even though on this one I got stopped out on one side, I still had a small profit, so that's pretty cool. And then finally, this one was from May 16th, which is when I started using Trade Steward and started experimenting with it. So this one opened at 157 on the 16th. I collected $3.20. The call side got stopped out, and I had to pay $3.50, which gave me a loss of $30. So it's very cool stuff. There's a lot to learn. It's a very, very robust platform. And again, as I said earlier, I think this is the way of the future. And so I'm going to dedicate more time studying and learning and finding the edge so that I can automate my trading. And I think the time investment that it's going to take for me to learn how to do this is going to pay large dividends over the long haul. One other thing that I did want to mention is that once you start collecting data from how your bot is performing, you can then go back to Options Omega. You can run the back test. Let's say, for example, on Friday, if I want to compare my results, my real world results, to how Trade Steward performed, and compare what Options Omega would have predicted with the parameters that I entered, I can run it for that particular day and compare trade by trade by trade to see if there are any differences, because I could have something that's entered incorrectly, or maybe a false assumption about one of the parameters that I entered that needs to be fixed, and maybe that's accounting for some of my losses. Or maybe everything's entered properly and this is just part of the strategy. This is just part of the drawdown that you're going through. So yeah, I think these are very effective tools that are going to give me the ability to have some very desirable results over the long run. So I'm very excited about it, and I look forward to implementing these tools in the future, and I hope you come along for the ride to see how it goes. All right, so anyway, now that you see what my new strategy is and what I'm planning for the future, let's go ahead and take a look at my overall results for the week. We already know we took a big hit, so I can do that by clicking off of closing out the 0 DTE strategy, and that's going to give my overall results for the week. All right, so it was 26, we're down 26,000 for this particular week. So overall for the year, let's take a look. Let me select every week, including week 20, and that'll give us our overall result. So now we're still showing a profit of $35,000, just over $35,000 for the year. The weekly average last week we were showing was $3,249. This week, with taking that hit that we did, that's going to drop our average down to $1,767. We're still up on the year, but obviously that's a pretty big hit. and a big lesson learned, and it's going to be a memorable one. Let's put it that way. And so let's go ahead and look at the overall chart for the year. And again, we see that upward movement throughout the year. We see where Liberation Day, Trump makes his announcement. We see some losses there. And, this is just another result of that announcement. It put me in a position where I had to, I was put in a margin call, and I had to buy some stock on margin, which put me in a position of having to pay interest on the stock that I don't want to have to pay, so I had to take that loss. It's not Trump's fault, it's my own fault. I didn't manage my capital properly, and trust me, I will learn from this, and I will not make that mistake again in the future. So that's how we improve over time. All right, so I know it was a long one, but that's it for today's video. I hope you stuck around to the end. I put out quite a bit of new information. We're making some changes. I'm really excited about the future. If you have any comments, any suggestions, any questions, please drop them in the comments section below. I'd love to hear from you. If you like this kind of content, hit that like button, subscribe, and if you want to follow me along on the journey, make sure you stay tuned, because I'm going to have more updates on the trading bots and on the backtesting, and showing you how I progress with that. So it should be very interesting future coming up. And again, thank you for joining, and I look forward to seeing you again next time on Better Options. Bye-bye, everybody.